Hi, good evening, and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang. Today is, of course, June the 15th, 2025, and we are going into the third week of June. And this past week, we have seen quite a bit of volatility. What was highly anticipated was the result of the US-China trade talks in London, which produces no agreement. However, they do agree to a framework in which to pursue further negotiations. Okay. Then in the middle of the week, we have the release of the CPI followed by the PPI, which shows that inflation is still very benign and it did not move market a lot. However, in the wee hours of the morning on Friday, a piece of news hit the market and caused market to gyrate. Okay, we have received news that Israel has launched a preemptive strike on Iran, and they have been itching to hit Iranian nuclear facilities for quite some time now, and it was largely held back by the fact that President Trump wants to pursue diplomacy with Iran, hoping to be able to hammer out an agreement so that it can satisfy Israel's desire to take out the Iranian nuclear facilities. That did not quite work, and it was supposed to be also a weekend beginning yesterday in which the US and Iran were supposed to resume their sixth talk in this series. Okay, that has been cancelled after the strike by Israel. And we also heard over the weekend, in the last 48 hours or so, the Iranian has actually retaliated, and that has also caused the Israelis to launch another wave of strikes on not only the Iranian nuclear facilities, they have also started hitting their Iranian oil field, which will be a major thing going into the new week. Now, before we go into the content itself, just remind you that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin financial products. We all understand margin products do carry element of risk, so be aware of your own risk profile before you attempt to trade any kind of these margin products. And of course, I'll be sharing you my views on the various markets, and do remember those are my views, and it's got nothing to do with the sponsor, which is IronFX, which has been sponsoring my Sunday event for quite some time now. Okay, and of course, whatever I say has got nothing to do with them. And of course, the content of this presentation has not been vetted by any regulatory body. With this in mind, let's get on to the week's activity. Okay, now earlier on, I did mention the whole world has been waiting for an outcome. It was an anticlimax because after 2 days and 2 nights of negotiation last week, the US and China did not come to any kind of concrete agreement, which market was eagerly looking forward to. Because a positive outcome would have caused the stock market to rally. And of course, on the flip side, if there is no concrete evidence that they have struck a deal, or worst case, if they cannot agree on anything, then the stock market may react negatively. What happened was they only came out with a joint communique, say that they have a framework to implement a consensus which they have been reached since last month in Geneva. Okay, that did not tell us a lot, but it also gave us a sense that it was a tough negotiation. But after this week event in the Middle East in regards to Iran, I think this trade talk is as good as dead. I will explain later on why this may actually have a negative impact on any kind of possible agreement between the US and China going forward. Okay. Now, remember, the talk centers on tariff, and there is no agreement on tariff. And what the US wants very much is for China to actually relax the control over rare earth. China has agreed to allow the export, or rather to speed up the export vetting of rare earth to Western companies on the basis that it must not be used for military production. Okay, any kind of it's a dual use thing again, and if it's purely, and if the importer can actually show evidence that it is only meant for commercial activity, then it will be allowed to be exported again. But then again, that will be in very limited quantity. Okay. However, I think from the speeches from the Trump administration, including Basson himself, it does appear that they do seems to feel that the talks both in Geneva and London would have already got a verbal commitment from the Chinese to release all rare earth minerals exports, regardless of whether it is used for commercial or it is used for military weapons production. Okay, so I think there is a little bit of misunderstanding there, and that could be a source of friction going forward. But like I said earlier on, what happened on Friday and over the weekend in the Middle East has largely killed off any kind of possible agreement in trade, because within the last week itself, while we are waiting for the release of this so-called agreement, okay, between the US and China, President Trump actually announced, in fact, he has actually announced it a few times, that he wants to impose sanctions on any country that imports Iranian oil. Okay, and with what happened over the weekend, any kind of agreement will be jeopardized by this new sanction that President Trump wants to impose on any countries that buys Iranian oil. Now, Iran is the fourth largest oil producer. Okay, although it has come under very severe sanction, oil still managed to be exported. Okay, the biggest buyer of Iranian oil, 80% of which goes to China. So if President Trump wants to impose additional tariff and punish countries that buys oil from Iran, then it will make the entire negotiation irrelevant, because China will never agree, and that will be difficult for them to pursue any kind of meaningful agreement going forward. So this agreement, with or without the framework, is to me as good as dead. Okay, of course, this is just my personal view. Things could happen otherwise. Okay, now President Trump in the middle of the month uh, and expressed that he wants to impose unilateral tariff again. Uh, so this guy is definitely going on with his tariff. So he wants to impose unilateral tariff again this past week. Okay, and we can see that the market did not react very well. We can see that the Hang Seng Index actually declined by the most after this news was released in the middle of the week. Now, what he means is that of the 90 deals in 90 days, remember the 90 days pause that he mentioned? Right now, he has nothing. Is 90 to 0. No country has actually signed any formal agreement with the United States. We have heard news that the UK and the US has actually had an agreement, but nothing was signed. Okay, so likewise, President Trump has been trumpeting that he has a deal with China after his representative come back from London after 3 days or 2 days and 2 nights of negotiation with China, and he went on social media saying that he has a deal. Okay, again, there is no formal agreement. So at this point in time, as the 90 days deadline draws nearer, he has no agreement from any major economy. So it is going to look very bad. And that is why he is saying that he's going to impose unilateral tariff. Take it or leave it. That's what he says. Okay. It means to say there will be no negotiation. He will decide unilaterally what will be the tariff country will have to pay for exporting into the United States. So obviously, this is not taken very, very well by the markets, and we shall be seeing the fallout in the weeks ahead. Now, another thing got passed this weekend, okay, and we saw that the U.S. Senate has actually passed the Genius Act. Remember the Genius Act we mentioned a few times in the past few weeks is actually a piece of legislation that is currently going through Congress. It has passed Senate. Next, it would have to be okayed by the Republicans in the House of Representatives. Once that gets passed, it will mean that there will be a set of regulation governing the issuance and the trading of stable coins. Okay, now we all knew that this Genius Act is a masterpiece, meaning to say that the Federal Reserve will no longer be the main issuer of the dollar. Up to this very moment in time, the entire structure of the the financial system in the US, the central bank, which is the Federal Reserve, reserve the right to create money. It still have that right. But I think it's born out of the frustration that the Federal Reserve has been very leery in cutting interest rates. And every week, President Trump has been telling the Fed chairman to cut interest rates, especially after this week's CPI and PPI data release that shows that inflation is nowhere to be seen. Okay, and he is definitely very frustrated with the Federal Reserve. There were talks that he wants to remove the Fed chairman, which legally he cannot, but he is coming up with names that can possibly replace the Fed chairman, whose term is going to expire in May 6, 2026. So by announcing names right now when the current Fed chairman has one more year to go, it will actually jeopardize the confidence in the Federal Reserve. There will be two talking heads, one the current sitting Fed chairman and another incoming Fed chairman. Okay. Previously, there was another name, but currently the latest name that has been touted to replace Jeremy Powell is his current Secretary of the Treasury, which is Bassett. Okay, so if Bassett is going to replace Powell, he will definitely be doing all Trump's calling. Okay, because he's after all his current Secretary of the Treasury, right? So this bill, if it's passed, will allow anyone to be able to issue stable coin. You and me should be able, theoretically, be able to also issue stable coins, provided those stable coins are backed by the purchase of US treasuries or the US dollars, but more of the US treasury. That means, in fact, with the passage of this bill, it is currently not passed yet. We still have to get the House of Representatives to actually pass it before President Trump can sign on it before it becomes law. Okay, once that is done, that means to say that uh, usually the US treasuries are bought by institutions. Now, with this Genius Act and the launch of stablecoin, anybody who issues stablecoin must buy dollar for dollar US treasuries, and that create another set of demand in the face of declining foreign appetite for buying US assets, in particularly US treasuries. Okay, so individuals will be able to buy, so are institutions able to buy. Okay, and there is no cap as to how many times they can regurgitate this issuing of stable coin, because the stable coins are backed by US treasuries. The short term, let's say use the US treasury bills, currently is trading just under 4%, meaning that there is a yield. For issuer of stable coin, they can benefit from the yield in the treasuries that they hold. Once they collect the yield, there is nothing to stop them from issuing another round of stable coins. And this can go into infinity, meaning to say that demand for treasuries now will have infinite demand. Okay. And this is one way the US government has been trying to engineer to, to actually create the additional and non-existent demand up to this point in time. Okay, so this is going to be a major legislation. Okay, now the other one, of course, is the one big beautiful bill. Okay, which has not been passed yet, but once that is passed, it will also means that the U.S. Treasury can issue even more debt. Okay, meaning to say that currently the amount of national debt the U.S. currently holds is hovering just under 37,000 trillion, 37 39, sorry, $37 trillion. Okay, it may well have passed that number as I'm speaking. Okay, so this is going to be a major piece of legislation. Keep your eyes on it, because once the passage is through, you can bet all digital asset is going to fly. Okay, now by Friday, okay, we also heard that Trump may consider imposing 25% auto tariff. Now, this is going to be catastrophic for countries like Japan. Japan's export a lot of automobiles to the United States. A 25% auto tariff on automobiles, not necessarily targeted at Japanese automaker, is going to kill off the Japanese automakers. This will have major implications, and it will also force the Japanese to do things that the US may not want to see. Essentially, they would have to show up their own economy, okay? Because right now, the super long Japanese government bonds, the yields have exploded. So in order to actually smoothen out the rise in the yield, they may have to start buying Japanese yen, okay, and also to buy the government bonds, okay. So that will also cause likely for the Japanese to also unload the U.S. treasuries they are holding. Currently, Japan is the largest holder of U.S. treasuries, and that will be something the U.S. treasury will not be too happy about. But with all this auto tariff, it's a life and death situation for Japanese automakers. Okay, it impact the Japanese more than the others because the Japanese are so reliant on auto sales in the United States. Then, of course, we knew what happened in California. Okay, it started off with the immigration customs uh, uh, going out to try to round up illegal immigrants in the state of California because the state of California has the largest number of illegal immigrants. Okay, so they decided to start with California, and immediately it turns violent. Okay, and that violence spread. And yesterday was the day in which Donald Trump celebrated his 69th birthday, and it's also the same day whereby the U.S. Army is celebrating their creation. So some some NGO came out with this slogan called "No King in America," meaning to say yesterday's parade was actually in the same tradition as what authoritative regime has been doing, such as in North Korea, for example, to celebrate their leader's birthday, they actually have a big march past, and Trump, deep down inside him, he wanted that as well. So he celebrated his birthday on the same day as the creation of the U.S. Army, and some GNO came out and said, let's protest across every state with a slogan called "No Kings in America." So you can see it's actually quite a violent thing. We have people using rubber bullets to fire at protesters and reporters as well. So a lot of people were saying this looks like the civil unrest that is evident in places like, for example, previously in Hong Kong. Okay, so this is a ground up kind of movements, and will it lead to major civil unrest? Again, to remain to be seen. Okay, so we want to keep this in check here because something bad can actually happen. Of course, this is the piece of news that I mentioned. Israel launched a preemptive strike on Iran. Okay, in fact, this is no news. Israel has been talking about it. They have been sending out comments that say they are prepared to hit the Iranian nuclear facilities because, according to some estimates, the Iranians are very, very close to be able to use the enriched uranium to actually create at least 3 to 5 nuclear bombs. Okay, so I'm not sure whether the Israelis are that close to actually acquiring nuclear weapons, but Israelis definitely are very concerned because the Iranian has openly said that they are going to wipe Israel off the map of the world. Okay, so both are arch enemies, and apparently the strike was launched in the wee hours of the morning, targeting not only military sites, they also target key military leaderships, including scientists involved in their nuclear programs. So it was quite a devastation, and within the day itself, okay, this strike was carried out in the wee hours of the morning, and by the evening of the same day, Iran has actually launched a counter attack. Okay, and Israel also launched another wave of a strike. This time, not only on the nuclear facilities, they are also launching attacks on very specifically on the oil field. Okay, so this is something that's still ongoing. What I want to show you here is this. Okay, and of course, what was supposed to be a sixth time the U.S. and Iran supposed to meet to negotiate about the nuclear deal has now been abandoned. President Trump said it has been cancelled, and Iran said that they are still working with third party like Oman, okay, and Syria to try to revive back the talk. So we can see in this map here, this is Iran, a big mass of land, okay, and then we have Israel, a sliver of land on the east coast of the Mediterranean Sea. And if for Israel to launch a raid on Iran, it has to fly over, potentially over Jordan, over Iraq, or over Syria into Iran. Okay, definitely, if they go down this road here, it will also have to bypass Saudi Arabia airspace. Apparently, it's not going to be easy. It's throughout warfare, we have never seen a country being conquered purely on air power. Okay, for the Israelis to actually be able to ignite a regime change, troops must be sent. Okay, it is almost impossible for the Israeli to send troops across so many other countries to reach Iran. Of course, the U.S. Seventh Fleet is already in the Red Sea, okay, and they can actually position themselves at the Gulf of Oman, which is over here, to actually carry out strikes and possibly land troops on the ground. But Iran is a big landmass, much bigger than Iraq. Okay, so it's going to be very difficult for this for the Iranian to be defeated unless ground troops are deployed. So right now, the US is in no mood to be ensnared in the conflict in the Middle East. Donald Trump has actually wanting out on the Ukraine conflict, and he definitely doesn't want to get himself involved in the Middle East because if the Israelis manage to actually draw in the Americans into this fight, okay, uh, then the US will have no choice but to fight this war on behalf of Israel. And if that's the case, then they will have no time to deal with China, which they feel is going to be their primary focus. They want to pull out of Europe, they want to pull out of the Middle East and stay focused on China. So not sure how this thing will evolve, but it will not be a good thing. Right now, we have seen reports, although it is unverified, that at least one, if not three, US F-35 has been brought down. Okay, there is no confirmation in the Western media, but on other social media, as many as 8 F-35 has been taken out. Okay, if that is the case, that will have a major impact on the dynamics of this war. Okay, so again, not sure how this thing is going to turn out, but what we see here is that uh, uh, there is this place here, okay, the Straits of Hormuz, the very narrow stretch or waterway between Iran and Oman, and I think to a certain degree the UAE. Okay, so if this area here is blocked by the Iranian, which they have not done to date, but if they do, it will restrict the flow of oil. Now, Iran is currently the fourth largest oil producer. They used to account for quite about 10% of the global supply of oil. Now, with the sanction in place, very little has gone out of Iran because of the sanction, but whatever that gone out has actually been bought by China. And this war, okay, if results in oil prices escalating, which it has, beyond a certain threshold, meaning to say the Chinese imports of oil, whether from the Iranian or from any other source, will become very expensive, and that make China a player in this conflict. Okay, so not sure how China will react. Okay, but we will have to consider whether Iranian actually seal off these Straits of Hormuz here. If it does, oil prices can be guaranteed to go way above $80 per barrel for now. Okay, so just continue to watch this fast evolving conflict in the Middle East. Now, earlier on, I did mention the latest wave of strike by the Israelis on the Iranian are centered on their oil fields. Okay, and these oil fields are very near to the outlet here because they are all concentrated to this export waterway here. Okay, so if that's the case, it will indirectly impact China negatively, and China may actually be a player. Okay, there are already news or rather rumors that Pakistan has volunteered, or Pakistan Air Force has actually volunteered to help Iran defense the airstrikes. And we all know Pakistan has a lot of Chinese produced warplane and air defense systems. So we will want to continue to see, okay, whether that is even true. And that will be a direct contest with another country coming in to the side of one of the proponent here. So continue to watch this because I think it's quite serious. Now, as far as economic data is concerned, we have the CPI numbers come out very benign. We can see that month on month, CPI numbers continue to climb in the single digit 0.1%. It actually dipped, okay? On a year-over-year basis, we have a bit of a bounce from the what call that, the headline numbers, 2.3% to 2.4. Okay, however, the core remains the same at 2.8. Okay, this is the third month in a row since March of this year that the core CPI numbers is at 2.8. So there is no increase, there is no decrease, it's just hanging there. Okay, so that means to say that the fear of tariff on inflation has not shown up in the data just yet, but we are still in the early state of this event here. Now, earlier on, I did mention, right, the fear of the inflation as a result of tariff has not shown up in the data yet, but it's actually good news for the FOMC. We all knew that this coming week there will be a FOMC, and it actually may allow the Federal Reserve to cut rates because the CPI and the PPI numbers are actually very benign. Okay, it does give a lot of excuse to the Federal Reserve to actually start cutting rates because inflation is nowhere to be seen. If they are data dependent, it is not showing up in the data just yet. Okay, so do not rule out 100% the possibility of the Federal Reserve actually doing something on the interest rate front. Okay, they may surprise us just yet. So as far as the PPI is concerned, we can see that it has also gone down from 4% in March down to 3.2, now it's 3%. So on the producer side, we can see the inflation is also cooling off, either as a result of less people buying or going into production because they are keeping a wait and see attitude as to how the tariff is going to pan out. Okay, so maybe that is a reflection of the slowdown at the shop floor in terms of the amount of manufacturing that's going on. That's result in less demand for input. Okay. Then, of course, Michigan Consumer Sentiment Index actually has a bump up. Remember, last month it has a catastrophic fall to 52.2. So for some reason, consumers in America seems to be a lot more confident now that maybe due to all this propaganda of a deal with China, people feel that the worst is behind, and maybe it's okay to feel a little bit more confident, and that could be the reason why the Michigan Consumer Index actually rose back up to 60.5. Okay, again, whether this is misplaced confidence or not, we will have to continue to monitor. Okay, so let me check if there's going to be any question. There are three questions here apparently. Tanvi is asking, would additional demand cause the yield on issued treasuries to eventually drop, as more demand theoretically means higher price and therefore lower yields? Yes. And one thing we have also observed, but not very widely reported, was the US Treasury has been buying their own bonds back in the open market. The Secretary of the Treasury, Besson, did not comment on that, but there were signs that the latest auction, okay, did not go too badly. Okay, so not sure who is buying this way auction in treasuries, but the U.S. Treasury has been quietly been buying to the tune of $10 billion in U.S. Treasury, both in the longer end as well as in the lower end. Okay, so I think last week I did mention about the buybacks. Okay, so this is still ongoing. So it's not quantitative easing in that sense. Okay, a lot of people call it quantitative easing light, but it is not, because the treasuries cannot create the money. Okay, only the Federal Reserve can create the money, and only the Federal Reserve can do QE. But what we have not seen previously was the Treasury buying back their own Treasury bonds. Maybe in a sense to actually lower down the yield, because there has been no demand, and the longer term yield, the 30 years, the 20 years treasury have all been fetching very, very high yield in excess of, for the 30 years is already above 5%. Okay, so the US cannot afford to buy or issue any treasuries in those numbers. It need to be a lot lower. So again, we will have to consider, because this is the month in which they would have to buy a lot of treasuries, or rather to issue a lot of treasuries to roll over those that are maturing. Okay. Also, increasing appetite back in the into U.S. assets. Does Genius Act also achieve the goal of reducing yield in line with Trump wishes? Now, if there is demand for U.S. treasuries, the yield will automatically come off. Okay. So if the Genius Act got passed, and a lot of major players like the banks, the brokerages, they are all wanting a piece of this action. Even Jack Ma and Financial also is trying to get licenses for issuing stablecoin in Hong Kong and in Singapore. Okay, so everybody with the ability to issue stablecoin wants to get in, because this is actually free money, at least for now. Okay, so Davey Hong, Genius Act is similar to legislating Bitcoin ETF, but the underlying asset is US bond, which is a depreciating asset. Yes and no. It is not like Bitcoin. Okay. You see, Bitcoin has been treated like the only cryptocurrencies that is considered to be legal. Every other altcoins are considered to be less than legal. Okay, so they have actually allowed the building up of a strategic reserve in Bitcoin. Remember, President Trump is a big fan of building up a Bitcoin strategic reserve. So it is not so much the same, because this is not something that wants people to trade. Okay, ETF is for people who doesn't want directly holding the Bitcoin itself, to actually buy into a fund. Okay, the stable coin is not. Stable coin is basically meant to be used very much like how the world uses US dollars as a reserve currency for settlement, for international trade settlement. Okay, at this moment in time, the US dollar is the only reserve currency that is widely used in international trade. Okay, so if there is less demand for dollar, hopefully the stable coin can pick up the slack. Okay, so Trump can actually have the cake and eat it, because he has always wanted lower US dollars. Now, what we are seeing since his inauguration, the dollar has been coming down. As of this week, the dollar index is down 9% already for the year. So he's getting one end of what he wanted, which is a lower dollar. But a lower dollar also means less demand for US assets such as treasury. So the stable coin can be the missing link here. You can use stable coin to buy treasury without affecting the value of the dollar. So I think this is something that they have dreamt about. The reason why they want stablecoin to be pegged to a US asset such as the dollar or the US Treasury, to give it that sense of confidence. Okay, so you may not trust the stablecoin, but you know that the stablecoin is backed one for one in US Treasury, which is in turn backed by the US government. So that should theoretically provide the trust element here. Okay, in my opinion, this is just another money game. Okay, because you are creating something out of nothing. Okay, to provide demand for an assets, so-called assets. U.S. Treasuries are debts that pay interest. Okay, and the U.S. has never had any intention of paying back the principal. So the whole thing about the upcoming deadline to roll over maturing short-term U.S. Treasury is the yield. So long as the yield come down, the U.S. can continue to issue treasuries. Now with stablecoin, which is likely to provide massive demand because stablecoin does not differentiate whether the source of fund is legal or is it shady. Black and white, I think stablecoin will be able to take it. Okay, and if you buy U.S. Treasuries with the stablecoin, it will gain a certain level of legitimacy. Okay, so I think they are banking on this, that stablecoin will be able to replace the demand that is currently supporting the U.S. Treasuries. Okay, so again, this is to me another money game. Okay, Anonymous is asking, can I kindly explain why Genius Act will be bullish for crypto? Because anything that is positive for crypto, okay, is going to put a floor under the crypto industry, or basically, okay, because it will also have a spillover effect. It will definitely not be negative. It will definitely be very positive. Okay, we have people and analysts coming out to talk about Bitcoin being at 1 million, so we have a lot of hype at the moment in time. Okay, if the passage of this stablecoin is going to create a feel-good environment, so I think a lot of stablecoins such as Ripple will actually benefit. Okay, so that could create a source of demand. People who are waiting for the introduction of this bill, once it passed Congress and Donald Trump signed into law, it would obviously be good. Okay, and there are a few altcoins that may actually benefit, such as Solana, such as Ripple. Okay, and we can see that prices has been relatively firm. Okay, so not sure whether you buy this idea of mine, but I think it will generally be good. Uh, Somebody is asking, is it certain stablecoin or all stablecoin that are planned to be back linked with the US Treasuries? Currently, the biggest issuer of stablecoin is Tether, which is USDT. The second is USDC, which is Circle. Circle just went IPO a couple of weeks ago, and it actually more than doubled in value on the first day of trading. Okay, so currently there are two major stable coins. Okay, and other than Ripple being also suitable for a stablecoin, we also know that the Trump family has also issued their own stablecoin, which is called USD1. Okay, so yes, it will be more than just USDT and USDC. Any kind of stablecoin, so long as they are backed by one-for-one US assets such as the dollar or US treasuries, will benefit from this legislation. Okay. All right, let's move on before we get stuck here. Okay. The Dow Jones actually was about to rally. And on the day when the news hit that Israel has hit Iran, the Dow Jones dropped 600 points in one single session. So that was the dip that we saw. Okay, where am I? That was the dip that we saw. Okay, there was a sudden dip in the Dow Jones. Okay, so the Dow Jones so far is a laggard. Okay, meaning to say among the major equity index, it does appear that the Dow Jones or international money manager is not really very enthusiastic about buying US assets, including US equity markets. In fact, the rally, the bounce from the 90 days pause, which is the April 7th, okay, has not been as enthusiastically been bought up as compared to the S&P 500 and the Nasdaq 100. So as far as international money manager is concerned, they are not too excited about taking the index much higher. In fact, where we are right now is nowhere near the all-time high, which we saw in last December at 45,000. Okay. So this is the S&P 500. You can see S&P 500 has been very enthusiastic. It has been climbing much more than the Dow Jones. We also see a pullback, but this pullback is on balance, not as drastic. In other times, when a piece of news such as Israel attacking Iran nuclear facility, which could cause a spiraling or the start of World War III, should cause US equity market to sell off a lot more. But we are not seeing that much in the S&P 500 so far. Okay, so again, market pullback on that piece of news, and this situation is more likely to escalate rather than to quietly go off. Okay, because if the Chinese get involved in the Middle East, which I earlier on did mention, they buy 80% of Iranian oil, and if that oil become more expensive, regardless of where the Chinese buy their oil from, it will cause inflation to flare up in China. Okay, and at some point, the Chinese would have to do something about it. Okay, so this is the Nasdaq. Sorry, Nasdaq is the one that is closest to taking out the all-time high. Okay, the all-time high was traded in February of this year, 22,222. We can see that the market came to 22,000, brushes against it, and then pull back. Again, this pullback on Friday could have been more drastic, but it did not show up to be that drastic, at least not yet. So we will have to continue to monitor this development. But by and large, technically, I think the Nasdaq and the S&P 500, if anything else, all else being equal, should be looking to take out the new high. Okay, so because the dynamics within the structure of the price movement suggests we are at that point in time whereby US equity markets, in fact, equity markets worldwide is going to take up their most recent high. Okay, so technically that is the case, and the fact that this news did not cause a major sell-off could be testament to the resilience of US equity markets, not only US markets, but I think all markets across the world. Okay, so you can see the treasury yields. Now this is something very interesting. Okay, normally when you have a situation like this, the first instinct, okay, is to buy US dollars as safe haven assets. And usually the demand for dollar will lead to demand for US treasuries. But we are not seeing that. This time the treasury yield actually went up, okay, which should be the other way around. Okay, if more demand for US treasury caused the yield to actually drop. But here, what we are saying on Friday, the yield actually climbed back up again. So this is something that is new to me. So I will continue to monitor this, not sure what will be the rationale for that. Okay, but it is something very curious to me. Okay. Spot gold on a close-to-close basis, this is the highest closing we have ever seen. Of course, the peak in spot gold is 3,500. Okay, so we did not have a break of the old high of the existing high, but on the close-to-close basis, okay, it is the highest we have ever seen. Gold closed at $3,432.64. That is the highest closing we have ever seen in spot gold. So this could be suggesting. Now we are right now in a very interesting period of time. Okay, technically, right now we have what looks like to be a triple top. Okay, if the market doesn't blast off tomorrow, okay, and close high tomorrow, then it leaves open the possibility of a triple top. Although that is not very high on my list, that the market is going to have resistance at a triple top, but it nonetheless is a possibility. Some will see it as a triple top and start to take profit and maybe sell off. But with the news since Saturday and today that both nations has struck each other again, okay, and the fact that according to some media, the Israelis have lost quite a bit of their F-35 stealth fighter. That could be big. Okay, so we do not know, but tomorrow will be very interesting. Anyway, going into this coming week on Thursday is a market holiday. It is supposed to be a 15 holiday celebrating the release of slavery, going back to 1864, 65. Okay, so it was a very recent holiday. Previously, it was only celebrated in Texas, but under President Biden, I believe, he actually making it a national holiday. Crude oil has the biggest mover this past week. Okay, going into the week itself, crude oil was still trading in the mid 60s. Okay, with this, crude oil went up to as high as $77.58, representing a move of almost more than 7%. Okay, so this going into this move here, now remember last week I said do not buy crude oil because it looks like potentially just a three wave followed by another resumption to the downside. Okay, but with this rally here, this one take out the previous swing high. There is a break of structure here. That means to say this materially changed the outlook for crude oil, and I have immediately turned bullish on crude oil. Okay, because this high here has been taken out resolutely. Okay, later on in the chart, I'll be showing you where I think it will be a good level to actually consider uh, 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 taking part in this potential big move here. The dollar index, okay, did come down, okay, but on Friday it actually bounced. This bounce here represent the instinctive demand for dollar after the news broke, okay, but it's a very small bounce. It should have a big and expanded move like the crude oil, but it's only representing a very small bounce, meaning to say the underlying still remains relatively weak, okay. So we will continue this, but I think technically, if you have not already sold this, it will be a lousy level to sell, okay? Because I think the low is possibly near the lower end of the 90s, okay? Not much mid left already, okay? In fact, if you start selling at this current level, your risk is actually very, very high, okay? Now, going into this coming week, oh, sorry, this is not this is the retail sales number. So we're going to change the headline. The retail sales is coming out on Tuesday, expected to be really bad. So this does not sync very well with the Michigan Consumer Sentiment Index, where the confidence actually bumped up to 60.5 from 52.2. Here, retail sales are expected to dip into negative territory. Okay, it has already dipped into negative territory. The control group, as far as we are concerned, is already negative for 2 consecutive months. Now, last month we have a major dip in the retail sales, so we will continue to monitor this. Of course, we have FOMC on Thursday morning. Okay, remember Thursday is the market holiday, but this comes in the wee hours of Wednesday. Our time will be technically Thursday. So no change expected, but again, haven't seen the CPI numbers and the PPI numbers. I would not rule out a rude surprise that the FOMC will decide to actually find it convenient to actually cut rates. Okay, so if that rate cut comes following a market holiday on Thursday when the market is not open, the timing could not be worse. Okay, it could cause they will cause a mad scramble to unwind position. Okay, because the market expectation is so low that there will be no cut. What if they actually cut based on the very mute inflation numbers that we saw this past week? Okay, it could technically happen. So don't be surprised if they actually do something on the interest rate front. Right, we'll go into the chart itself. Let me see if there's any other question that you guys popped up. Anonymous said that he missed out the early part. Did I say the Genius Act is expected to be cleared or approval? No, I did not say that, but it should be cleared within this month. Okay, we have 2 more weeks to go before June is out, and I think the House of Representatives will fast track it because it needs to be signed into law as soon as possible. Because there's a lot of treasuries that need to be rollover. Okay, Tanvi is asking the confidence in the S&P 500 and the Nasdaq probably more so from retail investors. Technically, yes, because both index are very retail orientated. Only the Dow Jones is where the smart money is. The institutions park their money. Okay, they will benchmark their performance against the Dow, but not so much against the S&P 500 or even the Nasdaq. Okay, so you can say that the retail investors are a lot more bullish than the institutions. Okay, so that is not a good thing because the retail guy always get in at the very last. Okay, at the tail end. So if you believe that is the case, you want to be cautious until the market take up the all-time high. Okay, right. Let's go into the chart itself. Hopefully, you can see my chart. I will start with the Dow. So this is the Dow Jones. Okay, this is the monthly time frame for the Dow Jones. Again, there is no follow-through buying. There was a bit of attempt to rally in the first 2 weeks of this month, but as of Friday, the market closed as a doji. Of course, we still have 2 more weeks to go before the June is over. We will only be able to see it by then. In the meantime, we can only rely on the other lower time frame. For the weekly time frame, we have a marginal new high for the week. Okay, in fact, this is the strongest traded level since this particular week, which is on March the 2nd. Okay, so we did not end up very positive, okay, but there was no catastrophic sell-off. So that could be seen to be a good thing. Okay. In the daily time frame, you can see that the market has come off within this bracket of prices, which I previously mentioned. Remember last week I did mention there is the possibility of a three-way bounce. Theoretically, the equality level is between 42,285 to 43,331. So the market hit a high of 43,151 and incidentally met by this move on Friday. Okay, this high was traded on Wednesday. Thursday was an inside bar, and Friday was resolutely trading to the low end. Okay, in fact, it was so low that it wiped out the entire week's gain. So this could be the start of something that may see immediate consolidation, if not more profit taking, technically speaking. So this is the 4 hours time frame. There's nothing to suggest that we are about to see a waterfall like collapse in prices, but for now, the drop from 43,151 can only be seen in the light as a counter trend. Okay, this is a bull market in a 4 hours time frame, and this bullish phase will remain in place until 36,700 is taken up. Okay, so that's a long way from where we are at 42,169. Okay, so by and large, treat this as a counter trend for now. Okay, no reason to be selling, honestly, because it should actually have elicit a much deeper collapse in prices on the news of the Israel-Iran war. Okay, but it did not. It was actually very controlled. So when you have such a major event which did not trigger a major sell-off, that shows that there's a lot of people who don't believe that this conflict is going to last. It's either good or bad. When expectation is low and the war drag on, or worst case, it has actually bringing other countries into the conflict, like Pakistan offering their air force, then that could change the dynamic altogether. Okay. Of course, right now the US is officially not involved in the conflict. President Trump has been very careful, saying that he did not know that Israel is going to launch that strike. Obviously, he is not speaking the truth, okay? Because I have seen movements in the defense stock, okay? Like Lockheed Martin, today I put out a post whereby on Wednesday itself, okay, I have seen evidence that buyers are coming in to buy this particular military contractors stocks. Okay, so obviously somebody knew that it's coming. Okay, and while the U.S. administration claimed that they are not involved in this conflict, they are actually very closely involved. Okay, at least they are providing the intelligence. They are also providing the refueling. Earlier on, I showed you the map between Iran and Israel. Okay, the jets that flew to strike Israel need to be refilled on the way back. If not, they will have not enough fuel. Okay, so I think the US with their carriers in the region is providing the refilling. So they are at best an accomplice in this attack. Okay, so they cannot claim that they are not involved. They are involved. Okay, so but if the US are more involved, then the dynamics of this war could change dramatically. Of course, Israel want to drag the US into this war so that the US will fight this war on their behalf, like what they did for Iraq, for Syria, and for Libya. The Israelis has basically allowed the United States to fight their war. Okay, so this is the Dow Jones. Let's take a look at the S&P 500, which has been more reactive. And we can see that again on the monthly time frame, we have a new high traded for this month itself, but it is at the close of Friday, it wasn't as drastic, okay? So again, we have 2 more weeks to go. It's too early to make a call. Here we have the original counter trend was here, from here to here, and that was eliminated. It was here to here, followed by here to here. Okay, the rise of this particular bar here in the second week of May has eliminated this counter trend. So right now the market is resuming its climb, and with the trajectory as such, it's only a matter of time. The high here at 6,150 is taken out. Okay. In fact, it does look like the trajectory is still very much favor continued strength going forward. In the daily time frame, yeah, Friday we see a bit of a pullback, but this pullback is inconsequential. Yes, it has wiped out the week's gain, but it did not sell off. So for all we know, this coming week we may see buyers coming back again. Okay, it's not that far away. This is the all-time high. Okay, in the lower time frame, you can see that we are still in the counter trend move. We have finished a three-wave pullback, and if the market next take out 6,050.72, it is going to gun for the all-time high. So S&P 500 technically does looks very, very bullish. Okay. Same thing with the Nasdaq. Monthly, we cannot see, but it is about the most bullish among all the major equity US index. We are just a hairbreadth away from the all-time high, 22,254.05. And so this is the weekly time frame. It has turned positive again, and trajectory suggests that there will be a challenge of this all-time high. So it could come as early as this coming few days. So in the daily time frame, you can see that except for Friday pullback, it did not lose a lot of ground. Okay. So we'll continue to monitor this. Okay. So far, the dominant trend is still in favor of the upside. 4 hours time frame, we have a bit of a three-wave pullback already. Okay. Next, in the market take up 21,971. Again, it will be resuming its uptrend. An ideal place to actually accumulate is possibly this area. If we do get a pullback into 20,600 to 20,850 levels, that will be a great level to see if it can hold. If it can hold, followed by a reversal pattern, I think it is still worth considering. Okay. Now, this is the US equity markets. Let me see if there's any question for me. Apparently, there's one more. Braden is asking, do I think the Dow Jones will correct further, or am I optimistic because I did not catch what you say earlier on? Dow Jones is not as optimistic as the S&P 500 and the Nasdaq 100 suggest, but I do not see a sell-off, at least not from the technical perspective. Okay. For some reason, the fundamentals are all wrong, but equity markets around the world, technically speaking, are very, very firm. So because the two are not in line, I will go with the price. Okay. So unless I see something otherwise, between fundamentals and technical, I will still lean on the technical. If I cannot see it in the chart, it's possibly not there. Okay. So I do not see a major sell-off in US equity market, not yet. Okay. All right, let's continue. In the European market, it's even more bullish. Let's take a look at the DAX. The DAX traded to an all-time high this month. Okay, we have a new high. 71. Yeah. So we have a new high in the DAX. So this is going against the grain. Okay. That was last week. This week we have a bit of a sell-off, okay? And then on the daily time frame, we are still in this phase here, whereby we could be seeing the beginning of a what call it? Beginning of a correction. Okay, how deep the correction goes, we do not know. So far, we can see that this is the 4 hours. So far, there is no three wave. We may get a bounce before it comes back down again to challenge this swing low here at 23,266 in the German DAX. But by and large, it is still very positive. So the lower it pull back until 21,736 is taken out, I'm still going to say that it is bullish, technically speaking. Okay, so I don't see a near-term collapse as yet. So let's go and take a look at the FTSE. FTSE is brushing against the all-time high. We are only 5 ticks away from taking out the all-time high. 8,909.2, the high traded this couple of weeks. 8,904.97. Okay, again, the high was probably last week. Okay, oh no, sorry, this week. Okay, so this week we traded to a high that almost came into contact with the high that we saw previously. Okay, so nothing to suggest that it is going to come back down. Okay, but based on what happened in the Middle East, anything can happen. Okay, so in the daily time frame, we are beginning to see what looks like a double top here. Will the market be cautious going forward? Possibly. Okay, and no clue. This is the 4 hours time frame. What looks like a start of a very minor pullback targeting 8,769. Okay, if we do see a deeper pullback, this area will be a great area to pick up some more if you are trading the FTSE 100. So in terms of European market is very, very, very strong. Huh? In Asia, let's take a look at the Nikkei 225. Nikkei doesn't have a great month so far. Okay, we do not have a new high. Do we have a new high? 747. No, no new high. Okay, so there was no new high traded in the Nikkei so far this week, this month. Okay, the best performance in terms of week was actually 5 weeks ago, and this week itself we have another challenge. Okay, so this is the all-time high, and there is no follow-through buying. Now, the only bullish thing about this chart here is the daily time frame for the Nikkei 225. Okay, we have a bit of consolidation from 36,451 to 38,774. So the market has been trading between this band. Very likely that it will do this and test this lower end of the band at 36,451. And any kind of pullback, so long as it doesn't close below this red line here, will remain positive. Okay, near term or rather medium term, the market has turned positive. So as much as possible, trade on the long side of this if you're trading the Nikkei 225. On the 4 hours time frame, you can see that the market has gone into consolidation more or less between the low here and the high here. We have a double top followed by a three-wave pullback. And I think instinctively, I think it will come off. Okay. If it come off and challenge this low here, I think the market could be trading between these two bands for at least the immediate future. A deeper dip into this area at 35,455 to 36,073 may provide a great opportunity to buy the Nikkei 225. Apparently, we will have to wait for prices, if they ever go into this bracket of prices, to produce a reversal pattern somewhere in this bracket. Okay, until that happens, I'm not going to be doing selling because equity markets around the world doesn't look to be wanting to come off. So selling is out of the picture, okay? But if I have to buy, I have to pick my fight, okay? Areas where I have proven to have support previously may be areas that you can be possibly buy, okay? Okay, Anonymous is asking the recent Israel-Iran war did not seem to have negative impact on markets. Does it look like we should enter long into equity markets now? I do not know because I do expect this war to spiral out of control. Okay, it's a very serious, not your typical raid into Iran. Okay, because this time they took out not only the military command, they also took out key scientists within the nuclear program. Okay, and if rumors that Iranian has actually taken out a couple of US F-35 stealth fighter, it is big news. Okay, and if the rumor that I just mentioned about Pakistani Air Force wanting to go in to support the Iranian to protect their airspace, that could be a wild card altogether. Like I said, if oil prices continue to escalate to above $80 and beyond, then it will provide the excuse for Chinese to actually come into the game. Okay? Japan will be dying because they imported 90% of the energy needs. Okay? Anything above $80 per barrel will kill off the Japanese economy. Now that they have issues on their treasuries front, they have issues on the inflation front, and with Donald Trump threatening to impose 25% tariff on automobiles, I think we will have to look elsewhere for trouble. Japan is a prime candidate, okay, for going under. If the Japanese economy cradle, it will take everybody along, okay? The UK right now has not so much debt, so is the European Union. They cannot afford crude oil prices at this level, okay? So we will continue to watch this because I think the implication, the ripple effect is going to be far and wide. Okay, I won't be looking to get into equity markets, but if technically the market come into a pocket of prices that makes sense to me, and if I see reversal pattern to confirm the entry of buyers, then maybe I will tag along. But we are near or at all-time highs. Just be a little bit circumspect. Okay. Wayden is saying that he believes that fund managers are doing window dressing to make the books clear in the last quarter. Plus, there's no strong alpha in other asset class. Gold is not that liquid, I believe. All true. Okay, gold is not as liquid as treasury. That's for sure. Now, the only major assets to actually move in tandem, okay, uh, in terms of the quantum of the impact of the Israel-Iran war has been oil and gold. Okay, so precious metal complex as a whole has reacted a lot more. Okay, so we will continue to monitor the precious metal complex as well as the energy. Apparently, only the crude oil is moving. Okay, natural gas did not move. Anonymous is asking if we are anticipating US to cut rates sooner than later due to urgency to refinance their debts. Should we look to long US bond now? It will take a very brave person to do that. Okay, you will have to have basis to go long in a set that nobody wants. Okay, do not buy any kind of government bonds. Okay, unless you're a bond trader, purely getting into the bond market just because you believe the US has no choice but to lower interest rates to buy to issue more bonds is a little bit standing on thin ice. Okay, I am not a big fan of a bond. Okay, no matter where the yield is. Okay, I am definitely not a player. Wherein is asking, so the only choice is the equity market, particularly the North Asia markets such as Hong Kong, China, and South Korea. I do expect this new development in the Middle East to negatively impact Chinese equity markets because of the impact of the oil. Okay, I do expect near-term weakness in Asia equity markets. Countries that import a lot of oil, like China, like Japan, for example. Okay, Korea also import in a lot of oil because they have no oil field. So if the war spiral downward, will crypto also be negatively impacted even with bullishness on Genius Act? Now, the one surprise this week was that Bitcoin did not rally like gold. So a lot of people say Bitcoin behaved like gold. This week it did not. Okay, Bitcoin actually went down. Okay, to test the lower end of the 100,000. Okay, so not sure whether it is related or not related, but it did not behave like what it should, like what it did previously. Okay, when gold rally, usually it will take Bitcoin along for the ride, but this time it did not. Okay, so there is something different this time around. Okay, people feel more comfortable holding on to tangible assets rather than make believe intangible assets like digital assets. Okay, I do not have all the answers. I'm just trying to put the pieces together. Okay, let's get out of equity and move on. Oh, I have to show you Hong Kong first. This is Hong Kong market. This is the Hang Seng Index. Okay, there was a continued attempt to rally in the monthly time frame. We don't see a lot in terms of this. In the weekly time frame, it ended up as a shooting star, not a good development. Okay, if this is how it is at the end of this past week, it is suggesting lower prices ahead. And if we do get a pullback into this area, yes, then maybe I will start looking at it. Okay, but it is not higher to sell yet. Hong Kong market right now is doing this, is actually very bullish. This is the daily time frame, by the way. It's actually quite bullish. So do not try to sell this unless you believe that the war in Iran is going to get way, way more serious. Right? Lower time frame, we are seeing what looks like the beginning of a corrective move. Okay, there's a three-wave move now, almost equality, and I will not be looking at a handset unless prices eventually come into this bracket of prices, and only if there is a reversal pattern within this branch. Okay, anywhere between 22,420 to 22,700. Okay, if price do decay into this bracket of prices, I will look for sign that there is buying interest. Then I will be a buyer. If not, I am not too keen to go into equity market at this point in time. Right? With equity out of the markets, let's talk about the dollar. So the dollar index, if you look at the higher time frame, this is the weekly time frame, looks like an ABC that is incomplete. So this week we have a marginal low at 97.58, and this is the lowest we have seen in the last 3 years. Okay, so will the dollar continue to weaken to lower? Like I said earlier on, if you have not already short the dollar index, doing so at its current level is a little bit dicey for me, okay? Because the risk reward does not make sense because I have a target to cut interest rate. That could be the one catalyst to take the dollar index down. But once that is over, okay, we have to look out for new catalysts. What is going to cause the dollar to bounce? Will there be any logical or a convenient driver that will allow the dollar to stabilize and then rebound? Right now, we don't see it yet, okay? But as the weeks unfold, we will probably see how the thing evolves. But like I said, right now, on the risk reward ratio basis, I don't think it's wise to be continuous selling. If you're already selling, then maybe it's worthwhile to hold on to your short. But if you're not in the market and wanting to get in out on the short side, it's a terrible price to get in. Okay, because my target is relatively near. Okay, so this is the daily time frame, and it looks like there is a 1, 2, 3, 4. And if this low here, if this low is technically fulfill this five-wave movement, okay, 1, 2, 3, 4, 5, okay, because all I need is just a marginal low below this. The low this past week was, look at 5.8. We already have the marginal low, okay. So what we are seeing here, ideally, is a 1, 2, 3, 4, 5 internal structure that will gradually see dollar index going down to 95. So this is based on the daily time frame. 4 hours, we have a bit of a bounce, okay? So far, there is no clean 5-wave. This could be part of a third, followed by a fourth to challenge this high here. If the market bounce back to, let's say, 99.20, for example, this will be the branch of prices we want to watch. Likely to be kept, followed by another dip below 97.58. And that will technically complete this internal structure here. Okay, guys, this is how I take a look at the dollar index. I think a low is not that far away. This is the Aussie. Aussie, I don't want to show you the monthly. I want to show you the weekly. This is the weekly, okay? Weekly, we have a bit of a continued strength in the relative currency as a reflection of the weakness in the dollar. So we can see that over the last 4 weeks, the rise has been more of a struggle. Okay, we don't see this explosive move. It's a bit of a struggle. So that is not a good sign, honestly. If you have to do very short-term analysis, do something like this. Just draw a support. Okay, the first sign that this thing is losing momentum is a close below the first support line, followed by another support line, and then you can say that okay, this bounce here is over. Okay, so far it looks a bit of a struggle to me. Let me say if I'm long Aussie, I don't expect to see a lot of money. Okay, it doesn't seem to be very proactive. Okay, you can see that the movement since April has been a bit of a struggle. But generally speaking, if you can draw a support line, you can actually see this. Okay, right? So you have one support, secondary support, and if market goes below 62 cents, it's all over. Okay, so even on the 4 hour time frame, it remains positive for now. But I don't think the money is in Aussie. What about Kiwi? Again, I'll be showing you the weekly time frame. Now, it does looks like a double bottom to me, okay, in the weekly time frame for the Kiwi. And if this is a double bottom, it looks like it will challenge the 63 cents, okay, 0.6380. That will be the logical level challenge. So continued strength possibly in the cut. But again, very much like the Aussie, is just struggling over the last few weeks since April. So if you want to do a simple support line like this, the first inkling of a failure of this market to go higher and a sign that it is losing momentum is a close below the support line. This is based on the daily time frame. 4 hours, the same thing. Drawing simple support will be as good as it gets. Sometimes it doesn't need complicated technical analysis. This is the nearby support. A close below this support here will signal that the market has lost its momentum to the upside and getting ready to come back down. Okay. So currency is not the best place to be in the market this part, as far as the Aussie and the Kiwis are concerned. Let's take a look at the dollar versus the yen. Dollar yen does appear to be still coming down, unfolding in a three-way. Okay, although we have a bit of a bounce from 140 onwards, I think it has lost some kind of momentum. And if the near-term weakness in the dollar is still playing out, we should be able to see another dip below 139.90. Previously, the lowest low here was 139.58. Could this low be taken out? If this is a three-wave, yes. Perhaps as low as 136.65. Okay, then look for levels to buy. Right? Because the US wants the yen to be stronger. So this dollar yen drop is also in line with what the US government wants. They do not want to see yen getting cheaper. They want to see yen getting stronger, right? But the yen gets stronger, it will cause another ripple, like the yen carry trade. Okay. So near term, continue to stay on the short side of this market as much as possible. Okay, because the larger degree three wave is still playing out, in my opinion. Not a great area to no trading opportunity in dollar yen. Now, dollar Swiss continue to fall. This is the weekly time frame. Remember, I told you last week about the strength in the Kiwi in the Swiss. Now, when you look at the currency market, which currency would you go if there's trouble in the world? Okay, that safe haven is no longer the US dollars, as witnessed by last week movement in the dollar index. When there's trouble in the Middle East, the knee-jerk reaction is to buy dollar, but the move in the dollar has been not dramatic, and it implies that slowly but surely the dollar is not seen to be that safe haven currency. Okay. However, the Swiss franc is currently the best looking bad apple. Okay. All currencies are bad. Okay. But the Swiss franc looks to be the least bad, because I did mention about a problem within the UBS. the Swiss government wants UBS to actually increase the reserve, and they are fighting tooth and nail. We're not looking about small change here. The Swiss National Bank wants the UBS to increase reserve by 25 billion. I can't remember what currency, whether it's Swiss franc or whether it's still a a big change here. Where is UBS going to find the money to provide for the reserve? They will have to sell something, right? And if they sell something, whether it's equity or whether it's just bond, it will definitely not be a strong currency after that. So again, this is all relative. The daily time frame, it does suggest that this long-term collapse has resumed. Okay, it does look like this 80 cents doesn't look very strong. Okay, it may be challenged. In fact, this past week, the low was 0.8055, not far away from 8039. This is the daily time frame. We have a bit of a bounce, but I think this bounce is also premature. So after looking at 4 or 5 currencies, it doesn't look like currency is where I want to be this coming week. Take a look at the euro. Euro did have a new high, but again, very much like the dollar index, this is the reverse image of the dollar index. It looks like an ABC to me. Upside, very limited. 1.19 is the AB equal to CD move. Okay, currently it's a 1.15 half thereabout. So top side not much unless you are a day trader. Okay, so this is where we are in the daily time frame. It looks like a 1, 2, 3, 4, and we have on the way to finish the last leg of this move. And if we are right, it's probably about 1.19. So if you're going to be a short-term trader, you can still go into buy, I suppose. Okay, but be very careful. You want to be very nimble trading the lower time frame. Okay, market is already on the way to finish the fifth wave. Okay, so 1.19 is still a target. So look for levels. If market can pull back, maybe if I expand this chart, market can pull back anywhere within this cluster of prices, then it makes sense. Okay, maybe somewhere around here. Okay, then it makes sense to consider buying. Okay, other than that, nah. And that is only meant for short term, by the way. Sterling on the weekly time frame, we have a marginal high. The structure is very different. I think there's a good chance it will change to challenge a 142 half. Okay, now it's 136.30, so it's not that far away also. But at least these two currency pair does appear to be more tradable compared to the other currency pairs. Okay, nothing to see here. Okay, there's no unique pattern here. Here, if we do get a pullback into this bracket of prices, maybe it is still worth considering buying. But remember, the dollar downward move is almost at its tail end. Okay, be very careful for violent reversal. Okay, I'm done with currencies. Let me see if there's any other question that you pose. Anonymous is asking, if the war spiral downwards, will crypto also be negatively impacted even in bullish? Yeah, that's the same question. I think I answered it. Okay, let's move on to gold. Gold have a fabulous week. Now, when you look into the monthly time frame, it does look like this momentum has come back again, big time. On a close-to-close basis, this is the highest close ever, 3,432.5.9, the highest closing. Okay. So in terms of the weekly time frame, it is also about to break up. We have finished an internal 3 wave, and now we have the highest closing ever. So that is very bullish in my opinion. I won't be surprised this coming week we'll see this blown away. Okay, 3,500 taken up. And the daily time frame is even more obvious. 3 wave equality pullback. Okay, and if this accelerate to the upside in a very explosive move, that will confirm that the bull market is back. Okay, my target. A lot of people are talking about $3,800. So the money could be better spent in uh, in uh, in this market here. So if we take this in a very conservative mode, A, B, C, then we are looking at somewhere just marginally above this. Okay. So again, it could accelerate. If it accelerate in a very explosive move, it could be a part of a third wave like this, very, very strong. Okay. So if you are buying or have already bought, maybe you'll take some money at this bracket of prices, somewhere 3,490 to 3,550. Okay, take some profit and then see if the market explode. If it doesn't explode, pull back, at least you're taking some profit. Okay. And if it explode, let it explode, and then next week, wait for the next pullback, and then to reestablish new position. 1 hour cannot see very much. Okay. But by and large, it's likely to be more to the upside than the downside. Now, silver has been outperforming gold for the second week in a row. Okay. This week, not as explosive as last week. This is last week. Last week, we have a major explosion to the upside. Now, remember the gold-silver ratio right now is just under 100. Okay. The highest, I believe, it was 136. So it is still possible for the gold to be more desired than silver. But we can see that silver is playing catch up. Okay? There have been more physical delivery in both gold and silver in COMEX that we have ever seen. So that suggests that there is demand. People are taking delivery. Okay, something that is doesn't often happen on COMEX. Okay, COMEX is purely for speculation. Here we can see that there is a very large daily time frame. You can see that there is a large three-wave move, and we are at the verge of the finishing the last leg of this move. And if this is correct, the next move should be quite explosive, go all the way to $40 before it meet any kind of potential resistance, and then pull back one more time and then gun higher. It's definitely going to look to be above $40 per barrel. I mean, $40 per ounce. Okay, so there is still meat in silver. This is the daily 4 hours time frame. Okay, anyway between $34.16 to $34.60. Okay, I doubt it will come here, but if it does come here, that will be a great area because that will be the consolidation before the flush. Okay, this is the where the demand actually exploded. So you want to look back in history and look for that consolidation before the big explosive move. So this is the one. Okay, if the price ever come back into this bracket, look for buy signal. And the other market, which I don't talk a lot, is platinum. Platinum also have a massive run up in prices. Okay, so this is the weekly time frame. Cannot see very much on the weekly. So here overall, it has potential to go all the way to $1,577. Now, gold is already more expensive, so much more expensive than platinum. So I think people are buying the one that has not moved. Okay, platinum used to be also one of the. In fact, platinum is irrelevant than gold. Okay, so this move here that we saw, okay, last week and this week, okay, is a reflection of people playing catch up. Okay, just like if you have been drinking coffee and coffee become exceedingly expensive, you start to look for substitute, right? You look for tea. So that could be that platinum could be the tea of this season here. Okay. So overall, it does look very, very explosive. Okay. But this on the daily time frame, Friday, they saw a massive sell. Now, this one is not a good development. This is a upside bar. Has the market exploded and then now looking to pull back? Even if they pull back, okay, it is still within the very bullish outlook. Okay. The first clue that we are in trouble is the market closed below $1,200. Okay, because this move here is a little bit sharp. In a correction, we don't expect to see such a sharp move. Okay, but if it's end up like this and not break below 1,201, I think it's still bullish. Okay. Now, this is by far the most explosive market, which is crude oil. This is the time frame, monthly time frame. Overall, it remains bearish from a high of 126.47. Okay, so the overall sentiment seems to be bearish. But this is the first, we have not ended the month yet, okay? But based on last Friday closing, this is the closing that is the highest compared to, let's say, 2 months ago. Okay, that could be a sign of a reversal. So this is the weekly time frame. This strong move here is likely to continue, in my opinion. So if you draw a simple line like this, you can see that the high here coincide with this resistance line. Once the market close above this resistance line and stay above, then it suggests that the low in crude oil is in place. And this will most likely tie in with a escalation in the war front. Daily time frame. Again, I want to show you this simple and yet powerful resistance line. Okay, the market miraculously stopped at $74.72. Okay, this is the daily time frame. So this is a very strong move, very explosive, very impulsive. So I do believe this is part of a third. Okay, so if this is 1, 2, 3, followed by a fourth wave pullback, it would likely result in another run up to challenge this level. By then, the prices will be above this resistance line. So the only area to look out for will be this swing high here at $79.37. If we have the first ABC 1, 2, 3, 4, 5 finish, followed by another pullback to the support turn resistance, resistance turn support, then it could be a buying opportunity. This is about the most explosive move. Okay, and then in the lower time frame, do we see a pullback? Right now, we are beginning to see a pullback. So far, the pullback is maybe can only be seen in a lower time frame. Let's see, this is the 1 hour. 1 hour probably will see something like this. But will crude oil prices pull back? I am not going to put a lot of capital on this. Okay. You really get a pullback. Then we are possibly looking at a return back to $67.40. Again, when we look at the structure of this move, there is a very strong rally here. And what is that bar before the rally? Here. Minimally here, if not, you will be more aggressive to put all the way here. That means anywhere between $66.60 to this high here at $68.12. That could be the area of pocket where the last demand was. Because evidently, there were a lot of accumulation going on before this explosive move. So the price goes back to the origin of this move. It will technically suggest that the demand is still there. So if you want to go in and join the buying, this will be a great area to consider if we do get a decline pullback into here. If it doesn't, the market continue to rally and take out $74.70, and then of course there's a totally different scenario here. But if it does pull back, that will be a great area to buy. Okay, always allow the market to tell you what to do. Okay, don't try to preempt it. So I have finished everything I want to show you except Bitcoin. Now this is Bitcoin. Now Bitcoin, this is where we are right now. Okay, Bitcoin did not take off like gold, but it is still on a month-on-month basis, on a close-to-close basis, is still positive, although it's only marginal. On the weekly time frame, you can see the market is in the consolidation phase. Can it result in another pullback into this bracket of prices below 100,000? If it does, maybe that will be your last call. Okay. In the daily time frame, this is even clearer. In the daily time frame, a three-way pullback would result below 100,000. 99,000, anywhere between 96 to 99,000. Okay, just short of this bracket. The reason why I listed out this area is that there is a flush here. This is the big explosive move, And when we look backwards, this is the area of accumulation. So theoretically, you want to buy anywhere inside this bracket. Okay. So we also have the fact that the bare minimum pullback is 100,000, 99,000. Okay. So if this is the case, look out for a reversal here. If not, then ideally within this bracket. Okay. Overall, it's still very bullish in my opinion. Okay. So this is the 4 hours. I can do. Yeah. It's going to be still very positive. Here we are looking at 96,000 and 99,000. Same thing. Okay. So within here, on the 4 hours time frame, in the 4 hours time frame, I have to remove this. Okay. Earlier on, I did mention. So if this is going to be where the equality is between 99,000 to 96,000. So we look back into this bracket of prices. Okay. So there was a flush here, but before that, there was a small three-bar structure here. Could this be where the demand is? It could well be. Okay. Because there's a flush here. So these are the clues that the market left behind. So if the market move into this bracket, goes into 100% 99,000, that could be a good area, a good area. Meaning to say that if the price ever comes into this bracket, look for buying signal, a reversal signal to happen within this bracket of prices. If it can, and it does happen, then be prepared to pull the trigger. Okay. So other than Bitcoin, I will show you Ethereum as well. Ethereum has gone flat. We have three doji in a row. This is very, very rare. Okay. For the market to end up with three doji, this is a very rare occurrence. Maybe the top, a temporary top is in place. So this is the daily time frame. Market seems to have lost momentum. You can see the market has been struggling. Yeah, it bunched into a new high, couldn't maintain it, slips back. So that is suggesting that this is possibly a fake move. Okay. And the support here is 2,325. And again, if the market go deeper, this is a flush, and the few bars before it is the accumulation. So technically speaking, there is the possibility market can go down a little bit more to test the $1,730 to $1,870. If the market comes into this bracket, look for buying signal. Go in and buy, put a stop just below 1,380 and take your chance with this. Okay, because overall it does not look complete. There's a possibility we are doing this, okay, gunning for 3,500, which is very much in line with this bunch of prices here. All right, maybe I will show you Ripple as well. This is the daily time frame. Ripple has gone to consolidation with a bit the downside. So there was no follow-through buying in cryptos. I think the market is all waiting for the passage of the Genius Act. Okay, so I think the amendment of the act, I think is very nearby. Okay, like I said, we are in the midst of June right now. I do expect that to be passed very quickly. Okay, so if that happens, I do expect another major rally. Okay, across the board. In terms of risk reward, anywhere below $2.16, that looks good. It is currently where it is. Okay, because this three wave ended marginally below, just above $2. I think $2 has been very supportive. You can see going back, you can see $2 has been very supportive. So the nearer you get to $2, the better it is, in my opinion. Market may drift. All right. Any other question before we end the session? No more question for me? Right. Remember Thursday is Juneteenth holiday, no market. And this coming Saturday, June 21st, I'll be giving a talk to Kananga It's a 2 hour stock center on Go. So if you are interested, do drop by, register at Kenanga website. If you want to have the link to register, reach out to me individually. You can always send me a message on Messenger or on WhatsApp if you have my number. All right, guys, thank you very much. I shall see you next Sunday.